edition of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the March 23rd magnificent Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, that we do all that we can do to have an extraordinary day. And, of course, let's always remember what's talked about is a dream. What's envisioned is exciting. Of course, what's planned becomes possible. But what's scheduled is real. And I want to thank you for scheduling your time with me here this morning. I'm grateful for your presence here, and I'm here to serve you. So feel free to pick up that phone and dial in 877-927-6648. Of course, internationally, you can reach out to me at 727-445-1044. Remember, if you've got a question, well, somebody else has got that exact same question. So don't call in for me. Don't call in for you. Call in for them. A random act of kindness. That's the way to kick off your day. Of course, this is Magical Monday, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading up 56 points, trading out at 18,185. The S&P is up 5 at 2113. Composite struggling just a bit this morning here, off 5 points at 5,021. Russell's off a point and a half, trading out at 1264. DAX is up 159 points this morning. The FTSE's up 7. Gold is flat out here, trading at 1184. Silver is flat, trading at 1685. Light sweet crude up 47 cents as we speak right now. Moving to the upside this morning, we've got Priceline, PCLN up $10, up about 0.8%. Herbalife up 13% here this morning, up $5 and change. CyberArk Software up 7%. 58.com up 6%. Amazon is up a couple of bucks. Baidu's up $3. Tiffany up $2.50. Toyota Motor Corp up a couple of bucks. Intercept Pharmaceuticals leading the charge to the downside, off $16. That's off 5.5%. Regeneron Pharmaceuticals off a couple of percent, 2.5%, down $12. You've got Receptos off $6. Bluebird Biology. Bluebird Biopharma, my guess, that's off $6. Biogen down $6 out here. Again, our call number 877-927-6648. Let's start off by going and taking a look at what's going on inside of the ETF structures here for the indices. Let's take a look at the QQQ series ETF. We take a look at it. You've got the Qs. They are trading inside the swing point. Let's see. The swing point for March 2nd, the low, 108.59. You're 108.59 as we speak right now. What do we know about the Qs? On Friday, you had volume here on Friday of 31 million, 32 million nearly. Moving into the swing point that has 23 million. That says at 109.42 ought to get tested. And if we see it close above that, then you're looking at the 114 to probably the 116 level inside the QQQ ETF. So expect 109.42 to get a test, to ring that bell. If we take a look at what's going on inside the IWM, down 2 points this morning. No big deal. The IWM already has a confirmed A to B equals CD to the upside. It's B point, March the 2nd, 29 million shares. Price moved through that without any problem with 40 million shares on March 18th. That confirms your A to B equals CD to the upside. That initial 1-to-1 price projection says 129.22 is written all over it. I would argue that 131.78 is more likely the price target, the next price target here inside of the IWM, the Russell 2000. If we go take a look at the SPYs up 53 cents as we speak with 11 million shares. What are the SPYs doing? Well, their swing point out here is from February 25th. The low is 211.22. The volume, 73 million shares. Price moved up into there with 228 million shares back on March 18th. Wasn't able to actually, let's see, the low, 211.22, the high 211.27. So you're pushing into a swing point with volume. Even Friday's action at 177 million versus February 25th of 73 million shares. The SPYs want to go tag that 212.24. A close above 212.24 brings 218 to 222 into play. That's what's going on inside the daily chart for the SPY. If we go take a look at the Dow Diamonds, the DIA, Diamonds up 60 cents with 1.2 million shares. The Dow Diamonds have been the laggard out here when we take a look at the indices. Well, what did the Dow Diamonds do on Friday? They traded into March 2nd swing point. 3.2 million shares there. You moved up into it with 5.9 million shares. You rejected it, meaning you closed below the low of that March 2nd candle. That's at 181.37. But you were moving into it with volume that says that you were going to go test it again. Now you're trading inside that low of 181.37. You're at 181.56. Volume so far today, 1.2 million shares. That's pretty good for 43 minutes of trading out here. That says that the diamonds want to go test the high, 182.68. It should be no problem to take out that high because there's only 3.2 million shares. If we see a close above 182.68, that says your price range is 188.81 to 192.23. That is what's going on inside of the diamonds. All four of those ETF structures say what? They say we're going to higher price. The weak link out here, not so weak today. The weak link was the Dow. The Dow was able to squeak above, more than squeak above on Friday. It's a price oscillator. It's zero line price oscillator. Change its summation index to the upside out here. You're getting some follow through to the upside as we speak today. Session is not over, but what that says is that now you've got the Dow participating in the move higher out here. That it bodes well for the markets. Now, what I expect is that the markets to move higher to sideways over the course of the next 5, 6, 7 trading sessions. That may aggravate some of you out there. You may see price pull back and think, okay, the high is in. Is the high in? Absolutely, positively, no. This high in the marketplace is not going to take place until we get to May. Then you see a bit of a pullback, and then you see price move higher into the July timeframe out here. What you should be looking for is, if you're not already long, you should be looking to buy the next pullback, the next retracement. It will occur over the next, between now and Tuesday. How do I know that? I don't. I'm giving you a time frame to look for based on a roadmap, based on a triptych that I began. That triptych started out back in January when I said the markets were going to make a low in January. Did they make a low in January? The answer is they most certainly did. If we take a look at the Dow out here, the low actually came in on February 2nd. As Steve Martin would say, excuse me. The low came in one day after, that January out there. Is that going to be a significant low? Are we going to see the markets pull back to that level? I do not think so. If we do, is there a problem with the triptych? Yeah, there will be a problem with the triptych. But I do not expect that we will see that. The low for the year is in. That is the 2015 year out here. You should be looking to buy pullbacks. Now, of course, it always depends on what time frame it is that you're trading. If you're an intraday trader, if you're using a 30-minute chart, you play the pattern on the 30-minute chart. I'm giving you the daily charts that we're looking at. We took a look at the daily charts for the index ETFs. They all say prices are at least moving up to the swing point. Maybe they move up there, they fail, and then they pull back. And that gives you your buying opportunity over the course of the next 4, 5, 6, 7 trading sessions out there. That's what you ought to be looking at. If we take a look at the summation index, the price oscillators for each of the 3 that we track out here, that being the New York Stock Exchange, the NASDAQ Composite, everything is in full-out bullish formation in these markets, and I expect prices will continue to move higher out here. We take a look at the VIX index. We haven't done that. VIX index well below the 50-day exponential moving average. That price point is 1565. You are trading right now at for 1326 out here. 1565 becomes your level of resistance inside of the VIX index out here. So it is in full out blown bullish formation. A quick peek in at the currency pairs out here. Your favorite currency pair and mine. That is the euro, Japanese yen. Is that moving lower? The answer is no. It's basically moving sideways to higher. What does that bode well for? The U.S. stock market's out here, because this currency pair is the carry trade. It has been the carry trade for a long time. It will continue to be the carry trade for a long time. As long as this currency pair moves higher, that bodes well for the U.S. stock indices out here. If we go ahead and we take a look at the euro itself, the euro against the U.S. dollar index, it formed a nice key reversal session week last week out here. If we take a look at that, we covered this during the first hour, but it is worth covering this hour as well. If we take a look at the high that was formed on May the 5th, 2014, not on May the 5th, the week that began May the 5th. So it's the week that ended May 9th out there. What did we have? A key reversal session. Well, interestingly enough, key reversal session at the highs. You now have a key reversal session at a potential low out here. This says the euro versus the U.S. dollar index wants to probably bounce up into the 118 level, 1.1809 to be specific. Nothing more than a dead cat bounce. What will that do? That'll go ahead and weaken, or should weaken, the U.S. dollar. Remember, it's a basket of 5 currencies. The euro representing 57%. I gotta just kind of cement that number in my brain. Is it 52, 54, 57? It's one of those numbers. You got to tell me, Johnny, which door do you want to pick? I'm going with 57. It's really 56.7 or 4 or something like that. In any event, here's what we do know. This, because of the weighting inside the U.S. dollar index out here, the euro, it says that the U.S. dollar index ought to pull back. What should that bode well for? Well, that ought to bode well for commodities out here. We took a look at what do we have? We took a look at silver with Jerry from Nashua during the last hour. And taking a look at silver, we'll just go back to that chart here. We take a look at silver. She broke out of a descending price channel. Did it with what? Did it with conviction. Trade at 16.89. Silver now on the weekly chart. You can see that this is a daily price channel it's in, but we'll leave it on the weekly chart out here. This says that silver's headed to 17.27. I would have to presume that this silver's going to head back to its highs from the week of January 26 and get up into the 1851, 1679-ish type area. This is Steve Rhodes. This is TFNN. We'll be right back.
As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. During the first hour, we didn't look at any intraday charts out there. We took a look at the long-term perspective. I've been away from you for about the last 8 or 9 trading sessions out there. So I thought it was a good idea just to get some long-term perspective as far as what the markets have done since I was last with you. Let's take a look at it. We'll do that. In fact, I'll do that in more of a brief way than I did during that first hour. Of course, you can get the archive of the hour number 1 on Channel 9 out there. In fact, you'll probably want to do that if you are a longer-term investor. You're taking a look at your 401ks. You just want to understand different levels to be watching. I covered each of the indices out there. I mean, in the New York Stock Exchange, the NDX, the composite, the Dow, the S&P 500 out here. If we take a look at, and I see Jay posted when outside our Tigers Den. Folks, if you haven't had a chance to check out the Tigers Den, come on over to the homepage at TFNN.com. Sign up for it. Check it out for the next 30 days out there. He mentioned that the ES Mini had made a new intra-session high, and it did. If we take a look at the 120-minute time frame, and we come off of a low out here, this is at 2,200 hours. This is back on March the 11th out there, and we start our little 7th inning stretch count out here, our 7th wave pattern to the upside. What we'll see, because of that little piercing of the previous high that was posted out here at about 2 o'clock in the afternoon. Again, it's a 2-hour chart we're looking at back on March 20th. What that does, that just simply recycles this count and says you're only in your 3rd wave to the upside. Now, there's resistance. Your TAS market profile resistance is right here, right about where we're trading right now, right around looks like probably about 2106.75 is the number. So a close above that would bode well for the bulls out here with regard to price moving higher. That's on your 2-hour chart out here. So thank you, Jay, for just simply indicating that the ES had made a higher high. That recycles that count. If the market is going to pull back, and it certainly was led by the NASDAQ composite out here, Russell 2000 also joining along. NASDAQ composite on its 120-minute chart also making that 7th wave, potential 7th wave count to the upside at 2 o'clock in the afternoon. That was on Friday. That says that high out here, come on, don't do that to me. That high, which has not been pierced yet, 44.72 is a significant level. If you see a move above that, then it'll join along with the ES Mini and say that higher prices are likely to come. You'd also want to see it close above the TAS market profile high of 44.67. You're only at 44.57. What to be watching for today is a close above 44.67. That says continued higher prices and a recycle cycled count going to the upside out here. If we take a look at now the longer term, so that's just shorter term, just take a look at 20-minute charts out here. I will tell you, well, I'll give you one other chart. If you take a look at a 10-minute chart out here this morning, that 10-minute chart, let me do this. A 10-minute chart out here went ahead from the high out here that took place at 1:30 in the afternoon. This is back on March 20th. It went ahead and made 7 moves to the downside at 6:10 this morning. Little hammer candle, little price relative strength divergence, and now it's on its move higher out here. So that's where the low came in this morning. Let's take a look at what's going on the longer term chart out here real quickly. Let's take a look at, this is the New York Stock Exchange. Actually, I want to take a look at more of the what you would more be using for trade. Let's look at the Dow, the INDU out here. We take a look at the Dow on the weekly charts. What we know is that the Dow is now up above, and it closed this week up above 18,123. That bodes well for the Dow. Now, the Dow had a key reversal week, the week that began March 2nd. That says that any close above that high, 18,288, along with the close above 18,123, that says 18,749 is in the picture out here. And any close this week above 18,123 likely says that price inside the Dow would be moving to 19,376. It's really the composite as well that we want to be paying attention to. Why? Because the composite, COMPQ, was the first one up into resistance or close to resistance at 5,055. That is a horizontal trading range. That is a significant level of resistance, which once crossed becomes a significant level of support, or should become a significant level of support. The key number to be watching inside the NASDAQ composite is 5055. When you get up to a hurdle, it's like any plateau. You know, if you're losing weight, you run into plateaus as you're doing it during that process. If you're learning how to play golf, you run into plateaus before you move and you forge forward. If you're playing tennis, you run into plateaus. When you're learning how to trade and invest, you run into plateaus. Well, plateaus inside the composite are 5,055. You climb above that, and it goes to the next mountaintop. Inside the composite, that would say eventually 5405 is where it would be traveling to. So there is a look at the long-term and obviously much shorter-term charts as we speak right now. You've got the Dow up 56, S&P's up 5, composite flat, Russell 2000 flat as well. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 45. S&P is up 4. Let's go out to Plymouth, Massachusetts, to Tom. Tom, thanks for calling. Thanks for holding. How are you doing today?
I'm doing fine, Steve. How about yourself?
Excellent. Thanks so much for asking. The ticker symbol I have that you wanted to look at is USLV, the 3-time long silver ETF out there. Tell me what you're doing, how I can assist you.
Well, I got out at Friday, but I'm looking for a re-entry point.
Okay. So if we take a look at USLV, you got out. So tell me how you're trading this then. Is this just a day trading vehicle for you? When you say you got out on Friday, what was the thought process behind that?
I was in for maybe...
Uh-oh. Tom, I'm sorry. I lost you. You were in for...
the mid-1770 or so, something like that.
Okay.
And Friday, I just couldn't resist. I had to jump out.
Got it. So, I'll take a look at this. Let me just pull up silver because obviously it's going to trade off of silver. Now, silver gave a pretty cool signal while I was away. I didn't notice it till till the other day here. And I like taking a look at that seventh inning stretch candle where it makes 7 wave counts to the upside or to the downside. In the case of silver, back on the trading session of March 11th, didn't confirm it till March the 12th out there. Actually went ahead and made that pattern, 7 wave counts to the downside. Now, what silver did, what you like to have seen, was it broke above its TAS market profile high out here, which was really set up in a bearish type of a style out here with this point of control line, the blue line being so close to the resistance level. And price broke above that with conviction on March 19th. Now you're only in 2 wave counts to the upside. Silver is going to go at least head for its 200-day exponential moving average, which is at 1752. So with regard to getting in and out, since you're not that far away, most likely in USLV from where you exited, you can take a look more at a cumulative process with regard to trying to time this one perfect if you were just into it. Right now, with silver, what USLV is doing. Whoops, sorry about this. Good Lord. A little rusty here. If we just take a look at normal Fibonacci retracement levels, Silver right or USLV is breaking right above the 0.382 retracement. And what this says to me, Tom, is that 2508 is its next price target. So with regard to, how well you want to time the entry on this, and so my question would be, how well do you want to try to time this entry? I mean, what would you want to use? Would you want to use what time frame would you use if you were trying to place a trade to enter into a position here?
I was trying to get in at 21:45 since about 10 o'clock this morning, and it just seems to have taken off on me. So.
Okay, so let's see. Let's take a look at a 2-hour chart out here. So I'm going to put this up on my screen here. This is for silver right now. And if we take a look at what silver has done, if I come off of the low out here inside of silver, give me a moment here to find my crosshair. Are you watching this on Tiger TV?
No, unfortunately, I'm not.
Okay, no problem. Look, in the case of silver, it made a low. Now, this is on the 2-hour chart. And if I come back to that same time period, which would be about the 12 noon time frame back on March the 11th, what it did as you maybe exited your trade on Friday, it made that 7th wave to the upside. And what it's done here this morning is it's broken above that. And that says that this thing has now recycled its counts out here. And that being said, if you're looking for an entry point, you're going to time it off of, let's say, a 2-hour chart out here. What you would ideally like to see this thing do is maybe, I'll give you a couple different price targets. The first one is going to be your ultimate price target, which was, this would come back to 1664. I think you said you were trying for you're trying to time it based, and I think you really got to be taking a look at silver as much as the USLV. Can you do that with your charting system?
I could, but I can't right now. But
Yeah, okay. So I would be watching for, in the price of silver, I'd be watching for the following levels: 1664, 1672, and right now on the 2-hour chart, it's trying to close above 1689. If it closes above 1689 by 12 noon, 1689 may be the only pullback that you get out there. But ideally, your price to enter USLV is if silver can pull back into the 1664. Let me see if I can put USLV on my chart here, this other chart on the 120-minute time frame. Let me see if I can give you some levels there. No, I can't. I'd have to shut my whole system down. There's something wrong when I tried to do that. But use those levels as I gave you on silver, and I think that will assist you in trading the USLV. All right, my friend?
Steve, good to have you back. I may try scaling in.
Okay. Thanks so much. I appreciate the comments, and have a great day. That was Tom in Plymouth, Massachusetts, and we were taking a look at the 2-hour chart. And really, the best thing there was we were using the tools in our TAS market profiles to help us with regard to those entry levels. And so if price does close above that high, then old resistance should become new support. And that's where Tom's going to have to. And scaling in is a great trading strategy. Just simply, take your risk, whatever that might be, typically no more than 1%, and then just break it into 3 even levels out there, something along those lines. Let's go see what else is moving and grooving in the marketplace. Let's take a look at things moving to the upside. You've got Priceline. PCLN is the ticker symbol, up by $9 and change out here. Let's go see what Priceline is doing. Now, Priceline had wide price spread, accelerated volume on February 19th. Broke to the upside, 2.6 million shares. The price never came back to the breakout area. It would have been 1129. Instead, excuse me, you had a little doji candle on March 17th. Doesn't mean a whole lot to me as price is moving down. Dojis mean more to me when price is moving up. But what we did is on the very next trading session inside Priceline, you had that 3-river morning star pattern out here. And that said, hey, you put in a significant low. At the same time that Priceline was doing that, you had new market profiles appear with our TAS market profiles out here, and that was down at that low. That says Priceline is going to move up into the 1205 area. And if it get above 1205, that says it goes back and test the highs out here from February 26th. That would be somewhere between 1238 and 1264. PCLN being the ticker symbol. Let's take a look at some of these stocks here that are getting hammered this morning. Intercept Pharmaceuticals, ICPT. down $8 and change, down about 3%. This is a daily chart that we're taking a look at out here. Volume so far, 368,000 shares out here. It made a high on Friday with 1.3 million shares. So 368 in a little over an hour of trading out here. It says you're probably on par with the volume that you saw on Friday. Nothing really significant inside of Intercept Pharmaceuticals out here. Let's see, what was this thing running into? It was running into this high volume high. Intercept Pharmaceuticals wants to eventually get back and test the August 12th high, and that's at a price point of $349.08. That has 6 million shares out there. So you're moving into that level, and that's the high that it wants to eventually test out here. If we look at Kansas City Southern, KSU is a ticker symbol down $9 and change. Looks like they might have been out with numbers. Let's go see what's going on here stock-wise. Now, volume to the downside, 1.5 million shares. It's taking out a B point that only had 4.2 million shares. So says that it has volume today. Let me clean up this chart out here. Let's see where this thing might be pulling back into. Well, this thing had broken down back on January 24th with 14 million shares to the downside. Now, that low has been tested. Price does not necessarily have to move back there. Let's go from the actual low, most recent low. That takes us to February 18, 2014, to its high out here, and that was on all-time high, it looks like, or 52-week high at least, on November the 11th. So price ought to move inside Kansas City Southern, ought to move back to 103.05. If it can crack that area, then you're looking at probably a run all the way back down to that swing point low from the trading session of February 18th. That low being 88.56 and the high being 94.73. KSU being the ticker symbol out here. Let's take a look at Regeneron Pharmaceuticals, off $9, down about 2% out here. Take a look at Regeneron Pharmaceuticals on Friday. Makes a high out here with 1.5 million shares. So far today, 300,000 shares. So this is pulling back with similar type volume. Nothing that is extraordinary as we speak right now, and volume is typically higher during the first hour than it is for the next several hours. So this pullback here inside of Regeneron could also be on light volume. If we take a look at, let's find something other than a biotech or a pharma out here, that would be, what would that be? That's pretty wild because that would be hard to find. I don't think Perrigo, PRGO, I don't think that's a pharma stock, but that's pulling back. That's pulling back right now. About 500,000 shares, down $5.85. It's about 4%, a little under 4%. This thing made a high back here on March the 18th with 1 million shares. You're pulling back with some volume today. Now it's got a TAS market profile low of 165, 165 even Steven. That should be some support inside it. If it breaks that level, they're saying, let me pull this back even further here. Give me a moment. That swing point that it's dealing with out here is back on, what is that, February the 11th. So if we take a look at just normal retracements from that low to the high out here, that would say that your next stop would probably be about 157.78 if it can break below 165. And that is ticker symbol PRGO. Let's take a look at a couple other things that are moving here to the upside. How about Herbalife, HLF out here? That's up about 10%. I don't see what news is behind it, but that is up $4 and change. So if we take a look at Herbalife, this thing looks to be forming a change in trend out here. Let me see if in fact it is. So if we, I don't know if it is. Let's take a look at the trend line. That's what we're going to look at first. And that's going to be a trend line coming off of the high out here in Herbalife from January 9, 2014. Yeah, so it's got a ways to go before it runs into that trend line. That is probably where Herbalife is going to try to trade into. Price-wise, that's in the $52 and change area, $52.50-ish or so. It's right now trading at $46.39. Pretty decent volume behind the move, 5.4 million shares. This thing also has a level of horizontal resistance. Let's pull this back out here. Here is your gap down. Here is your supply line inside of Herbalife. So if, in fact, Herbalife can close above, and you can see price really ran right into that level this morning, that level being 48.70. The actual high so far intra-session, 48.55. That's your supply line. Those are folks that took the trade to the long side on November 4th, and there were 12.8 million shares that exchanged hands out there, the top of which was 48.70. There are many of those folks that are just simply glad to get their money back because they were not really happy when price moved down to 31 bucks and change. So there's your supply line. That's the level in which Herbalife needs to get over. That's a horizontal level of resistance. If it can close above 48.70, it'll go try to take out that trend. If it does take out that trend line, then you might be seeing a change in trend inside of Herbalife, HLF being the ticker symbol. If we go take a look at Tiffany & Company, the blue box, you've got that is up 4.2%, up $3.50 out here. This looks like nothing more than just a bit of a bounce. Now, in the case of the blue box Tiffany, this thing had big volume out of it. It was, in essence, off of its highs out here. This was back on January 12th, 9.9 million shares to the downside. So far today, 1.6 million shares. This is going to have a line of supply somewhere around that price level of come on, work for me, baby. That's not going to do it. I could just read it, but I'll put that line. There you go, $93.73. In the case of Tiffany, it's also going to have resistance at 88.41. That's your TAS market profile high. That covers many of the equities here that are moving and or grooving in the marketplace. Let's go take a look at what's going on inside some of the ETF structures for the S&P 500. Let's take a look at that XLK out here. Up 8 cents on 1.1 million shares as we speak right now. If we take a look at the XLK, on its most recent pullback out here, was not able to get down to the 0.618 retracement level. It got down to a price low of about $41.26. 40.93 was its level. We saw some nice volume on Friday, but from a candle standpoint, just really more of a spinning top than anything else. There were 19 million shares. We had options expiration, so therefore, that may have occurred. That may have provided a lot of the volume activity. Nonetheless, it looks to me like the XLK wants to go make a run for that swing point from March 2nd. That's where it will release some information to us anywhere from the price level of 43.10 to a high of 43.46. If the XLK is moving into that number with more than 6.8 million shares, and so far today in a little over an hour of trading, you've done 1.1 million shares. If it takes that level out, if you're moving into that level with more than 6.8 million shares, it in fact could be forming more than a 1-to-1 A to B equals CD to the upside, and that is ticker symbol XLK, the technology sector for the S&P 500. If we look at the financial sector out here, down to about 3 pennies, that is no big deal. Boy, I got lots of lines on here. Well, that says because that's the swing point that it was dealing with. I'm not interested in that swing point anymore. I'm interested in the swing point here from December 29th. That is 17.9 million shares. Price has not gotten up into that level. Friday, 38 million shares. 2 days before, 47 million shares. The XLF, that's headed to that high. Now, December 29th, obviously a holiday, but even if we double that, 34 million shares, it says that that's where the XLF wants to trade to, about 24.88. Steve Rhodes, TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 58, S&P is up 5. Composite just slightly red out here. Flat market in the composite. The Russell 2000. Expectation-wise for the coming week, choppy market is what I expect out here. Choppy markets tend to frustrate people. Folks like markets moving either to the upside or the downside. I expect what we'll see out here is a choppy type style market. It does not mean that the markets might not continue to move higher out here, but I just expect a chop before we see the markets continue to take off to the upside out here. If we take a look at, what do we want to take a look at? Let's take a look at IBM. I put IBM up on my screen. Earlier, we took a look at the euro, and we mentioned a key reversal session that had marked the top on its daily chart back in May. As well, let me just let me do May. It was May of last year, I guess, right? Let me put the euro up here. I think it was May. Let me put the euro up here. Was it May? Was it May? What was a weekly chart that we were looking at? Weekly. By the way, weekly charts. Yeah, weekly charts have are stronger than daily charts. Yeah, it was the week of May 5th, 2014 out here. Key reversal at the top and a key reversal last week at the bottom. Should be pretty significant support inside of the euro US dollar. Well, inside of IBM, we've got something similar. Now, not on the weekly chart, but on the daily chart. So let's take a look at IBM out here. Give me a moment to punch that in. Of course, let's see what the weekly chart actually did here as well. Weekly chart, no. But let's take a look at the daily chart. And this says that IBM is going to go take a run for that gap. Now, a little key reversal session inside IBM. That took place here on January 29th when it was making its low. That may have been the flush out inside of IBM. So key reversal session, bullish engulfing. That says that IBM ought to have decent support at 149.52. Now, what it's running into is more than decent resistance out here. That resistance being that trading session where it gapped down with 23 million shares out here. So its supply line, it being IBM, is 166.85 to 170.33 out here. Now, small A to B equals CD, that is forming inside of IBM. Let's take a look at that. That's with the swing point from February 24th, 164.98 on 164.99, 4.7 million shares. Hey, IBM is trading into that swing point as we speak right now. In fact, it has tested the top of that swing point, and today so far 1.7 million shares at 10:56 a.m. I don't know how volume is going to continue inside IBM for the day, but if it can take that level out, close above 164.99, and this is one of your top weightings inside of the S&P 500, what that actually does is that sets up an A to B equals CD to the upside. That would give you a price projection, one-to-one price projection of 168.87, and that says it's inside that gap. That says that the 170.33 level ought to be attacked. That is what's going on inside of IBM. Now, it has been the Dow that has been the weakest over the last several days. If we do take a look at its summation index, it's well above the zero line as we speak right now. That bodes well to a change in trend, just as the change in trend that we saw inside the NYSE, inside of the NASDAQ composite. It is the buyers who have control of this market, and prices over the longer haul, meaning between now and the July timeframe, want to move higher. The original projection of the markets putting in a bottom in January, that is in play. So far, that has come to fruition out here. I expect that the markets will continue to move higher. That means you should be looking to buy any of your pullbacks into the May, July timeframe. Folks, it's been great to be back with you. Stay tuned because our man Basil Chapman is up next. Then we got, let's see, it's Monday, so you got Basil, you've got Daryl, you've got David White, Tom O'Brien. Have a great Monday. Look forward to seeing you on Terrific Tuesday. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.
She can dance all night.